Holy moly, we have a very crazy video for all Tesla stock investors, including the SEC, which is really cramping down on short selling disclosures. This is something that we have not seen ever. That's the one kind of position you don't have to report, is your short positions. Why and how or why does that make any sense at all? I don't know. We'll talk about the new changes here in this video. We will talk about address the elephant in the room here from the start off top of this video. AMC stock is down about 11.5% today. Some bad data that came out today. Some bad verbiage from Jamie Dimon, JP Morgan's longtime CEO. So we're going to get into all of this situation and much more. Go over all the data with AMC stock, why AMC is falling, and much more. Hit the like button, subscribe to the channel, and source your comments, questions, or concerns down below in the comment section. Let's go ahead and jump straight into it, guys. So first things first, AMC stock is down 11.5%. I want to say hedge funds, institutions, they are not the brightest crayons in the crayon box, okay? You are getting a risk-off move today. You are getting a fear move unlike anything we have seen in quite a long time. If you take a look at the NASDAQ is down almost 1%, basically falling off of a cliff as this fear move is taking hold in the markets. AMC stock, when there's fear out there, investors say, hey, this is a perfect time to short AMC stock on a non-split adjusted basis when the stock would have been 95 cents per share. Perfect time to short AMC when the fundamentals are only improving. Perfect time to short AMC when AMC stock looks destined to go through a multi-100% rally. Again, they're not the smartest crayons in the crayon box. Now, at the same time, this could be a last-ditch effort to take on massive short positions before those short positions need to be disclosed upon. It's uncertain how this is exactly going to work, if current short positions will be reported on or just future short positions after these new rule changes do go into effect. So we're going to start with that. It says the U.S. SEC to finalize rules increasing transparency of short selling the market. The U.S. Securities and Exchange Commission is set on Friday to adopt new rules that will increase transparency of short selling. The controversial practice of betting against stocks that drew new scrutiny amid the GameStop saga. The rules will require investors to report their short positions to the agency, and for companies that lend out shares to report that activity to the Financial Industry Regulatory Agency, FINRA, a self-regulatory body that policies brokers. The SEC's 5 commissioners will vote on the rules, which were first proposed in late 2021 and 2022 on Friday morning. Short selling involves borrowing a stock to sell it in the expectation the price will fall, repurchasing the shares and pocketing the difference. Should the price rise, the seller can be exposed to potentially unlimited losses. The practice has long been divisive, with critics accusing short sellers of trying to hurt companies and short sellers arguing that they may help root out fraud and corporate misconduct. But it drew scrutiny from Congress in 2021 when retail investors drove up the price of shares in retailer GameStop, causing heavy losses for hedge funds and that had shorted the company. In the wake of the saga, SEC Chair Gary Gensler told lawmakers he would increase the transparency of the market. Since at least 2021, the Justice Department and the SEC have also been investigating potential manipulation by short sellers and hedge funds around the publication of negative research reports. SEC officials said the new rules would support its efforts to police the practice. Specifically, institutional investors would have to report gross short positions to the SEC monthly and certain net short activity for individual dates on which the trade settle. The SEC would then publish aggregate stock-specific data on a delayed basis. Companies and other intermediaries involved in lending stock, as well as certain broker-dealers who borrow stock, would have to report information about the loan, such as the name and the volume of the stock, collateral, loan dates, and termination dates to FINRA. FINRA would then publish most of this data as an aggregate anonymized basis the following day. In a concession to industry, the final rule would see FINRA delay release of loan amounts by 20 business days. So what's going on here? The house of cards is starting to fall with AMC. You are about to be exposed, okay, in a very big way. What kind of effect does that have on hedge funds and institutions that are about to be exposed? A lot of the time, them suckers say, hey, let's go ahead and do all of the naked shorting that we can possibly do now because, hey, if we're going to get exposed and we're going to see our new positions that need to be reported, we need to do all of this activity beforehand before this new rule change does go into effect. Now, the government, SEC, FINRA, all these regulatory bodies act very, very slowly, so it could be a considerable amount of time before any of this data actually starts to get published and becomes public information. It wouldn't surprise me if it's 2025 by the time this happens. But right now, kind of that last-ditch effort to take out some of those naked shorts, take out some of those synthetic shorts as well. Now, AMC stock is down about 12.2%. We were expecting a red day at some point, but look at the red day. It is certainly coming full steam ahead. Now, the NASDAQ is also down about 1%. 0.82% to be more specific at the time of recording this video. Now, this is a major problem because of the economic data that we got today and the response from the market. Something is about to hit the fan. Let me be honest about that. So we had the Michigan Consumer Sentiment Survey come out today. Your survey number came out at 65. You were expecting 67.2. Massive, underwhelming loss there, or miss there, I should say. That's not the problem. 5-year inflation expectations came in at 3%. Your expectation was 2.7%. The 1-year inflation expectations came in at 3.8%. You were expecting 3.1%. This isn't even the problem. This is bad, obviously, higher inflation. Take a look at the bond yields today. 30-year Treasury yields down 8 basis points. 10-year Treasury yields down 7 basis points. You are getting a plummeting of yields today. Why is this a problem? Well, if you got higher than expected inflation expectations for the 1 and the 5-year, in which we did today, you would expect yields would go higher because that likely means higher inflation. That likely means the Fed has to stay potentially even higher for even longer. So why are yields going higher today? Well, take a look at TLT. Take a look at the markets. There is a fear trade going on here. I didn't mean to do that, but that's all right. We'll go ahead and pull up GLD. Look at gold. Gold. Who the hell is gold? Come on. Gold is up almost 3% today. Gold doesn't move 3% in a single day, all too often. Okay, that's a fear move. That is a big fear move. That is a gap up on gold. Last time you've seen anything even remotely close to this was back in March of 2023. The fear move because of the banking crisis. So you're getting the same fear move here today. Same thing with TLT. Again, you would expect individuals to sell treasuries and not exactly be buying treasuries like they are today. So this is... What can we look at? So JP Morgan, they just reported earnings. Their earnings actually came in better than expectations. Profits surged 35% to $13.15 billion, $4.33 a share from a year earlier. Let's see. It's really what he had to say. This could be part of it. Please sit here with me. All right. Right here. So he said, the war in Ukraine, compounded by last week's attacks on Israel, may have far-reaching impacts on energy and food markets, global trade, and geopolitical relationships, Diamond said. This may be the most dangerous time the world has seen in decades. While we hope for the best, we prepare the firm for a broad range of outcomes. What the blank does that mean? Huh? What the blank, bro? That don't sound good. JP Morgan, Jamie Dimon is by far in the banking world, basically besides the president or Elon, I would argue, is the most connected individual in the world. By far. I mean, for sure, by far. If he's saying that, we're preparing for a broad range of outcomes, yeah, that's a problem. Now, Israel is calling for evacuation of 1.1 million Palestinians in Gaza. At least 27 Americans are now killed. They're saying, hey, Palestinians, make your way to the south of Gaza. Because if you don't, well, there's going to be a problem. And these are literally flyers they dropped by the Israeli military. It says GTFO, out of Gaza City. get to the south as you can, and get away from Hamas, because we're going to kill all of them and you might be killed as well. It looks like if you're in the kind of top half of Israel, you will be considered a target or a threat. So there's that door for a we're saving our people kind of moment from some other country, like in Iran, like Lebanon, like Syria, like those countries. Okay, I don't think we need to elaborate on that too much. So that is not exactly great. This is why I do think the bonds are going higher. Yields actually going lower is not having this positive effect on the markets today, because it is a fear move. Okay, and expect a lot of volatility like you are seeing right now. It's going to be very, 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 very volatile. That is 100% for sure. Gotta love it. Just turn the light off. Stepped on the power strip. I need a nanny. Wins a nanny. I mean, come on now. If you guys just donated like $1 in super thanks on this video, we could probably hire a nanny for a while. Okay, I'm just playing, totally playing. But nonetheless, that is kind of what's going on here in the markets today. What's going on with this Israel situation? I think most of this has to do with Israel. It looks like the ground offensive is starting. That opens the door for further conflict and a rising of tensions, guys. So that is kind of what is going on today. The data, they're really not moving around all too much. If you look at the Stock O tracker data, you do have calls in the money of about 26,405. Out the money calls of about 82,000. In the money puts at 18,290. Out the money puts at 58,085. Looking at October 20th, you do have calls in the money of 31,133 that are out the money for next week. In the money puts at 13,000. Out the money puts at 92,500. So we do have a lot of bullish option activity that is really coming over the next couple of months. So no, I don't think this rally is over from AMC by any means. I do think there's a combination of fear happening out there, hedge funds, institutions not being the brightest crayons in the crayon box when it comes to hedging out their portfolios. Going short in AMC certainly doesn't make a whole lot of sense as of right now. Hopefully, though, this conflict in Israel does not get worse. Hopefully, the U.S. does not get involved, nor Iran. I didn't even know this, but that aircraft carrier strike group has like 6 ships, and they're nuclear powered, so they can last like 30 years out there without refueling. So kind of crazy. We'll ultimately see what happens. I'll keep you guys informed if there's anything you need to know about the situation that could affect your portfolios, that could affect the markets. Hit the like button and subscribe to the channel, and source your comments, questions, or concerns down below in the comment section. You guys have a great rest of your day, and I will see you in the next one.